Traders, welcome back to another price action trading lesson. Today is FOMC announcement day, and how do I know this? Well, it's because before every trading session I always make sure to check the economic calendar because I want to understand when exactly high impact news come out, because I don't want to be taking trades around high impact news. There can be spike in volatility. And because this is FOMC announcement day, it is very typical the first half of the day before the announcement to be very slow, and after the news come out the market will pick up a bit. So this is definitely normal. However, the price action rules are still the same. So I'm going to analyze the structure, big trading range, spike down, spike up, resistance, support, and I'm following the trend line rule. Now, uptrend played out with the break new high. We're breaking below EMA, so this is the first sign of possible reversal pattern. Uptrend played out, spike below EMA, new high, first entry long, pullback. So if we get a failed second entry long, it's going to be a reversal pattern. We have a failed second entry long here. Very close to being a solid reversal pattern, but we are not fully to EMA, and also the single bar didn't tick higher. Now very close to being a decent setup. You can consider, but it is more aggressive because you're not fully at the EMA, and I believe we had high impact news to be announced soon here, so it is better to just be patient. We actually had back-to-back news 8:45 in 9 o'clock, so it is better to be patient. Market keeps working lower. You can see the news came out, big spike in volatility, and another rejection of the EMA. So right now what I have to do as a price action trader, I need to look for the correct channel, because after breaking extreme, market keeps breaking lower. So I have to ask myself why, and EMA keeps rejecting series of lower highs and low lows. So the structure is more bearish than just this initial tight channel at first followed. So I'm going to look for a bigger pattern, and this channel is getting confirmation here and here. It aligns with the EMA, so this is a very nice wider channel to trust. You can see how nice the candles fit inside. So right now, according to rules, we expect new extreme to be tested. So I'm thinking about second entry short, but I can see that we have pushed above EMA, so this is already quite a concern. I'm going to see EMA rejecting prices, and now we have a second entry short. But problem is, since there was such a massive spike above EMA like this, and this second entry short is still above EMA, there's a big chance this bullish leg is going to get a retest. So I cannot necessarily just see it. I would like to see some new high, first entry long, pullback, second entry long failure. That never formed, and market continues to work higher, and now we have another second entry short that is also triple test. And this would have been a great setup had there been better signal bar. As you can see, you cannot sell below bullish bar. You are a seller, bearish trend is present, you expect new extreme to be tested following the trend line rule, and you have also visual to like a pullback, not only mini second entry short, but a visual one top, double top, triple top. You know, double bar entry maybe, but it's really looking quite ugly. Horrible single bar here. So great context for short, because you have triple test and second entry short, but the single bar was bad. Can we get lower high? We cannot get lower high. Now we tested the new extreme almost. We have actually double bottom, very close to new low being tested. And now EMA flattened a lot, and we are in the middle of the trend range. So there's a big chance we're going to test the new low again to get the technical new low, but at the same time, you know, sellers can consider double bottom valid as a retest. So I cannot be taking any step right now. Just gotta be careful. We are in military range. It is tempting to both buy and sell at the same time. This is what we call congestion. EMA is exactly in one of these bars, so I cannot take a setup in a congestion like this. Uptrend played out with the break, move to new extreme, and now we have another second entry short. We have a new low for the entry short, pullback, second entry short. The signal bar is quite big, so you may need to use limit order. And you're selling quite high, so this is a decent setup to take a chance because you're applying the range rules. You want to sell high. You trade it down into this, you have brought to like a pullback, decent setup. It worked barely for a scalp, 9 ticks exactly, so good enough. I don't think we can take a lower high because right now you're above EMA. Why we didn't break below EMA? If I'm going to sell, I need to see something below EMA. We have failed breakout, and we have 3 consecutive bearish bars. So what I'm thinking about is a lower high confirmation setup. But as you can see, lower high never formed. So market proved me wrong. I was looking for confirmation over the failed breakout going back into trend range. And because market keeps trending higher, it is very tempting to draw even the wider channel, something like this. Although it is not an alternative you're quite excited about, because if we're going to zoom back, this is a trend range. And we were really supposed to go back into the initial one. So let's see what's going to happen. Second entry long, never triggered. There is no break above this bullish bar. And by the time I can reverse down like this, you have to adapt. This is truly a trend range pattern, and I'm going to draw a brand new downtrend working lower like this. We have a small break, move to a new extreme. I'm going to extend my key level like this, break new extreme. Now when I was watching this live, I was playing a little bit below the downtrend because the push down was quite strong. But remember, I still need to respect the short-term uptrend. There is a second entry short, but it is a horrible inside bar above EMA inside of this uptrend, so I cannot sell. And once we push higher like this on a full second entry short, you have to adapt. Why we're tracing too much? There's a small break new extreme, and now we have actually decent setup. High-low confirmation of the failed second entry short. So right here, the high-low is confirming you that the failed second entry short is a valid setup, and this is first great high probability setup for today. Great high-low confirmation like this. Market created a break and move to a new extreme. Something like this. We're breaking below EMA, so at this point I'm going to redraw a bigger trend range because EMA is still flattened. You have consistent price moves up and down, so we have to follow right now trend range rules. Okay, buy low, sell high. But in the meantime, while you're expecting for price action to go all the way to these key extremes, you are still looking for channels inside of the trend range. And if you're going to get a good two-legged pullback, you can definitely consider. Okay, break, new extreme, new high, first entry long, pullback, second entry long. So downtrend played out, and we can trust the break in new low because it is very similar to this pattern right here. And you also have visual two-legged pullback like this, almost perfect measured move, brought two-legged pullback. And if I'm going to zoom back once again, flat EMA trend range. So according to range rules, you want to buy low and sell high. Downtrend played out, and this is not only second entry long, this is also failed breakout out of the trend range. You're far from the EMA, you're going to pull back. This is great high probability setup, second entry long, failed breakout. Market broke higher, and now we have what? We have confirmation setup of the second entry long and of the failed breakout. So this is another decent high probability setup. However, the signal bar is 4 points, so you definitely need to use limit order. But because the support keeps holding, downtrend played out, the sellers sold directly into the support while the downtrend played out. You're back above the EMA. You need to follow the trend range rules. High-low is a confirmation setup. Can we get also for second entry short? No failed second entry short right here. We have micro double top count reset. I was looking for second entry long, but there is no, actually it's a little bit tighter like this, but there is no second entry long because I have to reset the count. You can see this high and this high equal highs, count reset. First entry long, by the time I get a second entry long, we already created new high, so I cannot go long above this bullish bar because new high was already created. Market keeps going lower like this. So you can see pretty healthy and convincing trend range, breaking new high reversal, breaking new low reversal, breaking new high. So we expect another reversal. Just simply following tight channels inside of a trend range. Break lower, now we have lower high. Below EMA, it is okay setup. Because the trend range is so healthy and market is really reversing, every single time there's a break in your extreme, you can consider lower high right below the EMA, something like this. And now we even have a failed second entry long, new high, first entry long, pullback, second entry long failure. So you can also consider a failed second entry long because right now there is no reason to think bullish because uptrend played out, market will pivot, failed second entry long, decent bearish bar, market continues to work lower. Now, this would have been a good area to go long again, but we have inside bar here. Can we get a high-low confirmation up above EMA? You know, this is high-low, but notice how far up the signal bar formed. It is far from the EMA, so we can't really take it. And generally, you don't want to be trading 1 hour before the FOMC because it gets really slow. So as you can see, the FOMC announcement is going to be announced soon. There can be spike in volatility, so you don't want to be placing trades at minimum something like 30 minutes before FOMC. I generally take the whole hour because a lot of times the hour before FOMC, there is nothing happening. It's just stalling, so slow. News came out, so I'm going to speed this up a little bit because it is super fast. It doesn't seem like this when we're watching this in hindsight, but when we're watching this real time, everything is moving super fast. You have no time to think about the structure. Now market finally is breaking higher, and now it is becoming easy for me to understand what kind of structure am I thinking about, because we have high lows inside this trend range, and right now we have brand new uptrend established. I'm going to draw a brand new uptrend working higher, something like this. You can see how EMA is pointing up. The uptrend is very strong. Only the first entries are working. You can't even pull back to the EMA. I'm thinking about second entry long. Now we have a second entry long, but we're not at the EMA. Okay, you can see we're not full at the EMA. Tempting setup. Market keeps working higher. Now the break is so tiny, we can actually widen it just a little bit, because when the break is this tiny and the structure is basically still intact, I can definitely keep the channel still in play. So you can see we can't even touch the EMA. This is a very strong uptrend. So the bias right now, based on price action, as you're analyzing this, is bullish. So your goal is to let the correction play out. Break, move to a new extreme, downtrend played out. So you have break a new extreme for the downtrend. And right now you're thinking about new high for the uptrend, following the trend line rule. So this is how you're going to predict the direction bias of the market. But just because you expect new high, that doesn't mean you can just buy blindly at the bottom right here, because you don't know if there's going to be one more push lower. You need to see that push above EMA and high velocity setup there. And now we have a high-low confirmation setup of what? It is confirming second entry long right here. And it is confirming the fact that we need to get new extreme. So this is a great high probability setup, high-low confirmation setup of the second entry long. And it is also confirming the fact that we need to get the new extreme. So great single bar. And now we even have second entry long and a failed second entry short. But the single bar is not that great. But because the context is so strong, there is no case for bears. Downtrend played out, two-legged pullback, push above EMA. There is absolutely no case for sellers. So you can take a setup that is a little bit more aggressive, more sketchy. You can see the nice tail at the bottom indicating buying pressure. Had this closed one more ticket high would have been a decent setup. I'm going to mark it definitely aggressive, borderline being green, because this is very close being great setup, because it is double high probability setup in one. New high, first entry long, second entry long, new low, first entry short, second entry short. New high was created, so I have to pause looking to go long, though EMA keeps rejecting still. But since you just have a breaking new high, you have to be careful. So let's see what's gonna happen. Okay, at this point it's starting to look like there may be some additional channel, but we're breaking back below the EMA like this. So I'm gonna redraw possible uptrend like this, excuse me, possible downtrend. You have a second entry short, but it feels way too early to sell just yet. If I'm gonna zoom back, notice how strong this uptrend was. You know, this is too early to sell. So I'm just gonna be careful now. EMA is flattening. We are entering a consolidation phase, so this is pretty much area of development. No good setup here. It is both tempting to buy and sell at the same time, so we gotta be careful until there's a brand new structure developed. Right now the market is finally breaking lower, so now we have clean leg down, brand new downtrend established, so we expect new extreme, new low. So we'd like to see second entry short at the EMA, first entry short. Can we get the second entry short at the EMA, the high probability setup, while the downtrend needs to get new extreme? No second entry short, only first entry short. Okay, significant momentum is happening. You can see the downtrend is quite strong. Notice how far it is trending. So once again, why after breaking low, there's so many pushes to a new extreme? There is possibly a bigger, wider downtrend. So I can draw wider downtrend, something like this. And let's see how the correction is gonna play out. We have a first entry short. You can see we have a second entry short, but you can't take this. This is so far down. Far from the EMA, the move down already happened. Okay, the move down already happened. Once again, double bottom. I cannot sell now. Now we have first entry short. You can technically call this a full second entry long, but it is too late because the move down already happened. You want to catch the trap when the move down is about to form, not when the leg down already happened. And now we have a second entry short at the top of this resistance. Problem is the short-term uptrend, no matter how I draw it, is still in play. Actually, it is a new high, excuse me, for this leg. I kind of didn't notice this, because if I'm going to measure this, yes, this is few ticks lower than this. So this is a first leg break, second leg. Oh, now you have broad two-legged pullback and also new low, first entry short, second entry short. So you have visual second entry short and tiny local second entry shorts. This is a great high probability setup. Broad two-legged pullback, downtrend needs to get new extreme. Lower highs far from the EMA we cannot take, and now we have, how would you call this? Double high probability setup. New low, first entry short, second entry short, new high, first entry long, pullback, second entry long failure. So every single time you have more reasons to enter, you always trust the setup a little bit more. The more reasons you have, the better. Broad two-legged pullback played out is indicating reverse of hell, because reverse is supposed to be steep, strong push above EMA. There is no bullish trend present. Flat EMA, broad two legs, bulls attempted to reverse, failed. It's basically confirming that big downtrend is going to get the new extreme. Two great high probability setups, and now market keeps going, but it's getting way too late. Very typical FOMC day, where the first half of the day is extremely slow and the second half is very, very volatile. You have to be careful trading the second part of the day, because everything is so fast. The bars generally are much bigger. So if you're new to this, make sure you're gonna scale down or just go to simulator, or maybe just watch it, see how price action develops, because it is moving so fast and it is hard to make decisions. So make sure you're not going to be trading your live trades when you're uncomfortable, because you need to be comfortable. So just go back to sim to maybe get the practice and get to experience what it's like to be trading faster markets. So this is it for today. I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.